Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, I'm happy to be with you today. Glad you're with us today. And I want to talk to you a little bit more about how we can use stock trading as a family business. You know, the Bible talks about the family business a lot. I mean, it's the main way that God teaches us, I think, to prepare our young people for their job. It shouldn't be just going to college and learn to do something no one else in the family's ever done, I don't think. I think predominantly God teaches that the grandfather should teach the father, and the father should teach the kids, and the kids should teach the grandkids the same skill sets that the family business has been learning over time. And the potential for generational wealth is found right there in that principle. And through all these principles that are taught in the Bible about financial leverage, all these things are taught in the scripture. And the more we pay attention to that, more we can get back to having influence in this world, because we'll have money. We'll have riches, and that buys influence, and we can influence our universities. We can influence who they hire. We can influence the music industry, the Hollywood industry, and the sports industry, and everything. So, that's what one of the goals of TRADEway is to help create more potential wealthy, good people. And by that, I mean Christian people who have wealth so that they have influence. And certainly understanding how most of the Forbes 400 people, the largest percentage anyway, I won't say most of them, but the largest percentage of people make it through the markets. Okay, they learn the stock market, they learn the bond market, they learn the real estate market. And blue collar workers, what do? We bought into this thing, which I hate. I just don't like it, but it's like you send your kid off to college to learn to do something no one in the family's ever done, to be taught by someone who doesn't love them, and then go work for somebody who doesn't love them, who's not going to share the skill sets with them. I prefer the way my family did it. My great-grandfather taught my grandfather skill sets, who taught my dad those skill sets, who taught me, plus each generation has their own smart ideas added in there, and so that my kids and grandkids got the benefit of all that. They had a competitive edge over their peers when they got the age to go out in the marketplace. And by the way, all 5 of my grown children work with me in the different various businesses our company owns. I mean, I am a full-time pastor. I'm senior pastor at Park Meadows Church, but I've never taken a salary from the church because God has blessed me in business. And he can bless you in business if you learn the principles God teaches about business in the Bible. And as my pastor friend out on the West Coast recently said, "Brother David, the Bible is not predominantly a book on finance and economics." Well, you know what? It is predominantly a book that is practical. And where God commands us to lay aside for our kids and grandkids, he then shows us how to do it. It's in there. You just have to dig for it. You have to study, but it's there. So it's really cool stuff. Now, we talked about that in the last show if you want to get a lot of detail on that. But today, let me talk to you about some of the wonderful skill sets we talk about at TRADEway. And we've already been talking about the idea of the three-legged table, that you need to understand fundamental analysis, technicals, and market tone, those 3 things to do a good stock trade. And most people don't demand that their trade has all 3 of those, and so they don't do very good trades. And catch earlier shows on those individual things and what they mean. The other great thing is to figure out what the big boys are doing and jump in with them. Which stocks are they in, and get in with them and then get out before they get out. We teach you how to do that at TRADEway. And then the other thing is, how do you get the math on your side? Because the big boys on Wall Street use probability math. We're going to teach you how to do that, and it won't hurt. I know we don't all love math, but it's not hard math. It's not difficult. It's just important, and we're going to show you how to pull that math around and get it on your side, because this is what most people don't know. If you learn to win big when you win and lose little when you lose, then you don't have to get every trade right. In fact, you never will. Anyone that knows anything about stock trading realizes that you have to be willing to lose money to make money. You have to have 4 out of 10 trades may go differently than you thought they would. Even if you just got 6 out of 10 trades right, you have the potential to make money if you get the math on your side. And when the play works like you think it does, you let it run to make 30 or more percent. And when it doesn't work right, you manage that loss at a manageable and acceptably small loss of, say, 8% in stock trades. That can be done. And when you do that, you can clearly see if you can get about 6 out of 10 trades right, you have the potential to make money. So you don't have to get them all right. You're not going to. These are all things to learn. You got to be okay with risk. And guess what? Our whole college, university system, elementary school, even our parents and grandparents, pastors, everybody teaches us that risk is bad. And yet God's principle that he put out there in the universe is called the risk-return trade-off. It's in the universe just like gravity, is that the amount of wealth that I can create for me and my family is directly proportional to the amount of educated risk I'm willing to take. Now, that's a mouthful, but it's a principle. God doesn't like gambling, but he loves educated risk, and there's a difference. Stock trading is only gambling when you don't know the skill sets. When you know the skill sets and you do it like the big boys of Wall Street do it, they're big boys for a reason, because it works, because they know the skill sets. So when you learn those skill sets, then all of a sudden you're taking what God calls good educated risk, and God loves that. If you don't believe it, check out the parable of the talents, something you taught about or were taught about as a kid. Go read it as an adult, and you're going to see God loves educated risk, and he rewards it, and he punishes those who are ignorant on how money works, who haven't learned the skill sets, and who are fearful. So our whole society has caused us to be fearful and to seek what they want to call stability, and to go out and get that paycheck and just make sure you get a stable little paycheck, and you trade your infinitely valuable time for a little bit of someone else's money your whole life, but it's secure, right? And never take a risk. You know what the world has prepared us to do? To never create wealth. So that's something we talk about at TRADEway all the time, and these are biblical principles. But let's talk about some stock market stuff for a minute. How about that? Okay, let's talk about money management. And I'm just going to do it on a big scope, not detail for today, okay? But on a big scope, we have what we call the 80-20 system. And it's not really 80%, 20%, because it's different for every person. So it could be 10%, 90%, who knows? It's different for all of us. But what we like to say is roughly divide your total money in the world, your total assets in the world, into 80%, which should be in longer term, safer, better diversified positions. Kind of what the world teaches on buy and hold, although I don't agree with everything they teach about it. I don't agree with everything they teach in the MBA program about it, but kind of like that, okay, for now. Let's just call it kind of like that. The only difference is I want you to learn enough skill sets where you don't let your financial manager lose 30% of your total money in the next bear market crash, which he probably will. In 2000, 2008, I had scores of people come to me, probably in the hundreds of people at breaks and events that we were doing, that showed me their statements where their guys have lost 30% of their total money in the whole world. Well, you don't want that to happen, right? Well, you need to learn enough how to manage your financial manager, for one thing. We'll teach you that at TRADEway. But beyond that, it's way more fun to learn how to trade yourself and how to invest properly. So 80% of your money should be in these longer term, more highly diversified portfolios, and we'll teach you about that. In fact, we have a system called the AMPed system, a division of our company, where we can help you invest your long-term buy and hold and retirement money the right way. It's even based on biblical information. You might want to check that out at TRADEway.com. It's called AMPT, the AMPed program. But for 80% of your money should be in safer positions like that. 20%, and like I said, it's not really 80-20. It could be 90-10. My point is, we don't advocate that you ever have more than 20% of your total money in shorter term trading positions. So when we talk about the 80-20, it's just vernacular. It doesn't literally mean those percentages, but never more than 20% would you trade with it. So that means the vast majority of your money you're not trading. Now, what's the difference? Trading is shorter term. It inherently is higher risk, but what is God's formula for risk-return trade-off say that he put in the universe? And that is that all other things equal, the more risk you take, the more return you can make, right? All other things equal, the more risk you take, the bigger potential you have to make more money. So the world's conditioned us to take little to no risk and see what that's going to do for you in God's formula. So you've got to learn to take more risk, but manage the risk properly. TRADEway is going to help you with that. So even knowing how to manage the risk, shorter term trades are riskier. Therefore, they have the potential for higher returns. You're used to getting 8% a year, maybe. I can show you some strategies that can make, over 200% on a particular play sometimes when the play works right. They don't always work right, but you can do it. I mean, it's out there. Even in the parable of the talents in the Bible, those guys are making 100% return per year. So don't just believe you're stuck at 8 to 12% because your financial advisor does it that way. He's probably got you over diversified. But anyway, my point is, what if you leave 80% in better diversified, safer positions? Yes, we agree with that. But you take 20% or 15%, a small amount of your total money, and you take more risk with it, but you manage the risk and you have the potential to raise the return on that money, then couldn't that make your entire portfolio have a higher return? Well, you certainly have the potential to do that with these skill sets, and that's what we're talking about. So the first principle, we call it the 80-20. We don't want you using more than 20% of your total assets for shorter term trading. That in itself helps protect your money, right? Now, there's some other things that we teach all on the internet that are really, really important. So we want you to go out and grab these strategies and skill sets at Step 1 Start Your Journey or in the Trade in 30 Days Challenge. And then we want you to do what we call paper trading. We want you to trade these strategies with no money. All right. You can grab, $1,500 in a garage sale and put that in your account and just let it sit there. And you can trade without using any of it. And we call it paper trading. We're going to teach you how to do the paper trading so that you understand without spending any money whether the strategy seems to be working for you, whether you're keeping the rules, whether you're good at it or not. Secondly, we move you then to a second stage, which is so important. And I don't know any other company that does it. And even if they are, they copied us because we're the first ones to do it, I believe. But we call it small money trading. So now we can take that $1,500 that you earned at your garage sale and do the same strategies with that small amount of money and see if you could triple that money in, say, 3 months, including your losses. Because if you can't do that, you certainly don't need to trade with $15,000 or $150,000 like so many people make the mistake of doing. You need to be good at the small money trading next. And we're going to show you all of that, how that system works. Now, isn't this a cool thing to think about? Think about this. Everybody's so worried about risk. Okay, so what if you had a garage sale and you raised $1,500 and you paper trade some strategies you learned at Step 1 Start Your Journey or in the Trade in 30 Days Challenge with TRADEway, and you start paper trading and it's working and you go, wow, okay, I'm going to try this. So you actually take the $1,500 and you put it into one of these trades and you stop it out and you lose 8%. Okay, well, you still got plenty of money, so you keep putting in the trades and you keep trading, and over a period of 10 trades, you get 6 of them right. And now instead of $1,500, you've got $2,700 in your account because you made money, right? Now imagine if you continued to do that for 3 or 4 months and you doubled or tripled that money. See, now you've had the potential to turn $1,500, into $3,000 and then maybe double that again, $6,000, eventually $9,000. Now, when you've got about $9,000 to $10,000 to trade with, you can actually have the potential to create enough money to buy a new set of tires with Wall Street's money by getting the trades right, using the money you're making from Wall Street. You're leveraging the big boys. They spend all their time and all their money. They're on the 5th wife, and their kids hate them, but they're great at money. And so you leverage their knowledge, their skills, their money to make money for your family. Now, wouldn't that be cool? And guess what? What if you messed up, you broke the rules, and you lost? Let's say you built that up to $9,000, and you say, oh, I'm just going to put all that on one trade, and it goes wrong, and you freak out, and you lose all of it. How much did you really lose? You really only lost $1,500 that you made in a garage sale. You didn't even touch your retirement money. You didn't touch any of your savings, any of your assets. You haven't hurt yourself. You just hurt your feelings, and you learned how to not break the rules. So I don't think you'll ever lose the $9,000 because if you just use stop outs, you're going to lose maybe 8% of what you put in any one play. And by the time you get out to $9,000, you're going to divide that into three groups, chunks of money, as I call it, of 3,000, and never put all 9 in one play at that point. You're going to diversify a little bit and put them in 3 different plays from 3 different industry groups, each having $3,000. And now you're managing your money and you start building it that way. So you start to put together these money management concepts, the idea that you never put more than 20% of your total money into these plays anyway, so you don't risk all your money doing this. And really, if you do what we teach, you do the small money trading, you start out with some money you made at a garage sale or something and only risk that and triple it in 3 or 4 months. And then all of a sudden you got significant money to trade with. You didn't touch any of your money. Isn't that cool? So see, you can learn to handle risk by just learning money management skills like that. So now let me talk about something else. We have a couple of divisions of traders that you'll learn about. And I like to divide them into 2 groups, active traders and passive traders, or you could say active investors, passive investors. The whole world wants you to be passive. Why? Well, I ask groups this question all the time. It's usually after I've spent the morning teaching them God's principle of the risk-return trade-off, that the amount of risk that I make for myself and my family is, all other things equal, is directly proportional to the amount of risk I'm willing to take, right? And I teach that and I nail that home and say you can't get around it. It's like gravity. It's just how it works. And then maybe after lunch, I'll say, wait, hey a minute, can you, how about this? Can you think about a way that a person could make millions of dollars in the stock market taking 0 risk? And by now I've already taught them the answer is no, right? So they all say no. And then I say, well, you actually can. But it's kind of a trick question. Well, how can you do that? You trade with other people's money. Wow, it gets quiet and they say, man, that's what Wall Street's doing. They're trading with my money, so they're trading risk-free. They make money when I lose money, and when I make money, they're always making money. You see, so this is why we want you to get this education and learn the skill sets that they have. You can cut out that middleman. And you see, just think about it. That's sweet, isn't it? So why do they want you to be a passive investor? So they do all the trading with your money because you don't know how to do it, right? We want you to become what we call an active investor, where you learn how the skill sets work. You learn the difference between long-term investing and short-term trading. You learn to do both. And you even get help with your long-term investments through Amped with TRADEway. And we'll teach you to do the shorter-term trades with 20% or less of your total money and get active with that. And that's really important. The whole world wants you to be passive. TRADEway wants you to be active. And by the way, passive investors tend to be value investors. They look at blue chips, they look at ETFs, and they way over diversify. Active investors that are good at what they're doing and making money, they tend to be growth investors. They use growth stocks, not value stocks. And if you don't remember what that is, go check out an earlier episode. We taught on that. And they tend to not over diversify. I'll give you an example. Warren Buffett, you know how he started? He bought 1 or 2 or 3 stocks that he understood well. He didn't put his money into 30, 40, 50, or 400 stocks like your financial advisor usually will do, or maybe not even stocks, maybe bonds also. In fact, most of his money went into Coca-Cola when he started out, and he understood the company really well. And at that time, Coca-Cola was a growth company, not now. But back then it was, because it wasn't in India yet. They weren't selling Coke in China yet. They weren't selling Coke in South America or Europe yet. But they were going to, so it was a growth company, and Warren Buffett hit it right. But he understood that company well, you see. So you don't want to over-diversify because you can't understand a large number of companies well at one time. So we teach all these principles at TRADEway. You'll get it. Go out there and look at TRADEway.com. Sign up for our next 2-day event called Step 1 Start Your Journey. It's awesome. You can do it right there from home, and you're going to start picking up these things. Now, that presents a bit of a problem. If you're only going to use 20% or less of your total money, that means you're trading with a relatively small amount. Now, I know the other 80 will be in long-term positions that grow more slowly, maybe 8, 12% a year, which is really slow. But it's safer, theoretically, and I understand that. So therefore, we're only going to trade with a smaller amount. How do we handle that problem that it's a small amount, relatively speaking? Well, there are 2 things we can do to work on that. One is called trading on margin, which we'll talk about, and the other is called doing options. And one of these days, we'll have a whole show on options because they're pretty phenomenal. They can turn every dollar you have into having the power of $7 to $14. Imagine that. Now, see, the big boys use this all the time. Your senator knows it. Wealthy individuals know it, but nobody wants blue-collar America to know these things. How can you leverage your money so that every dollar has the power of $7? In other words, you could buy 7 to 10 times the number of shares with the same amount of money if you knew this. We're going to teach you that when we get to options, right? But what about margin? Well, every account you open, you should probably open it with what's called a margin agreement. And once you get that, it's fantastic, because let's say you had $1,500 in your account because you had that garage sale, and you throw that in there. Did you know you can actually buy $3,000 worth of stock with it? Because that's buying on margin. You say, well, that's too risky. Well, not when you know how to manage the risk. Okay, so that's why you need to get involved with TRADEway, not when you know how to manage the risk. It actually is leverage. It makes every dollar you have worth $2. Now, let me explain something. If you've had your financial advisor has already lost 20, 30, 50% of your total money, it's going to happen again. And you don't have to let them lose it, by the way, because if you get involved with TRADEway, you're going to know how to manage your financial manager. But here's my point. They've already lost it. So you need to make it back, right? Well, one of the ways you make money back when you don't have as much time left to make it back is through leverage. So you need to learn to use margin. You need to learn how to trade with options. Stocks have options. Most stocks do. All the great stocks have options. And we're not going to go into all about that. You won't gain, I can't teach that in 5 minutes, obviously. But if you wanted to buy, a great stock that costs, say, $300 a share, you're not going to be able to buy a whole lot of shares with $1,500, right? But what if you could buy a call option on that same stock and it only costs $3 a share? You see how many more shares you could control with the $1,500? You could control enough shares to make a difference. Because why does it matter? Well, if you're doing the stock and you could only buy 100 shares and that stock went up $5, you'd make $500. But what if they're using options? You could have controlled 1,000 shares and it went up $5. That's $5,000 you just made, and they usually take about 2 weeks. So like in 2 weeks, you just made $5,000 with the amount of money you would have had to spend on just, a couple of hundred shares if you had to buy the stock. But because you had the skill sets of options, you were able to leverage your dollars and make them worth 7, maybe 10 times more than they were. So just that knowledge is powerful, powerful stuff. So we're going to be talking about that in future shows. So keep coming back. And if you love what we're talking about here, the Bible principles, but also the trading principles that our family's developed over 4 generations, now 5, going into 6 generations, then rate and review our show so other folks that you think might be interested will find us. Tell your friends about us, and we'll see you next time.